Good evening, everyone. Welcome to our financial literacy workshop series. Tonight, we have 2022 tax returns with Kathy Carroll. Thank you for being here, Kathy, at our Center for the Women of New York financial literacy workshop series as every month. We really appreciate you bringing us information about taxes and tax season. In case anyone here is not familiar with the center, CWNY helps women overcome financial, violence, social, wellness, and legal issues by raising awareness and advocating for full gender equality for women, understanding their needs, and connecting them with CWNY services, nonprofit partner organizations, and public resources to aid, uplift, and address their challenges. Some of our current services and programs are referrals and advocate program. We have this workshop series, Financial Literacy. Every third Wednesday of the month, we have a career workshop series every second Tuesday of the month at noon. We have two support groups, one for women in crisis and one for caregivers, for those of us who take care of aging family members. We have a one-on-one tax preparation assistance, which we're doing right now. We're alternating locations between our Bayside location and our Kew Gardens location. We have it every Thursday, starting at 12 until 4 p.m. Is that right, Kathy?
Yes.
Or 5? Yeah, 4 p.m. So 11 to 4, sorry. 11 a.m. to 4 p.m. So if you need to do your tax return, Kathy will help you with that for free. You're welcome to make a suggested donation, but you can do that for free. But make sure you make an appointment on our website, which we'll share in a minute. Lana, if you could share our website now, that would be great. We have our gardening and sustainability workshop series also that is in person. It's every Thursday of the month at 10 a.m. In Fort Totten in Bayside in person. We're doing seeding now, and our veggies are growing already inside, and we'll move outside when the weather is good for the plants, for the vegetables. We have a ESL class. We will have ESL classes in person very soon. We're just figuring out logistics. We have a legal support team that answers to your inquiries via email. We have yoga classes on Wednesdays at noon and Thursdays at 6 p.m., both in Fort Totten and Bayside as well. So join us. And we have self-esteem workshops on the, Lena, help me here, is it the third Thursday, I think, of the month at 7 p.m. If you'd like to watch any of our past events, virtual past events, you can find them at cwny.org/past-events. If you have any questions, your questions will be addressed at the end after the presentation. You can use the chat box at the bottom of your Zoom screen or the Q&A feature as well. If you dialed in, you can email your questions to events@cwny.org. Lana, our amazing volunteer who's here, will make sure that she reads your questions. They're addressed also at the end of the presentation. And now I will turn it over to Kathy Carroll. Again, we are here at our financial literacy workshop series, and tonight we're talking about 2022 tax returns. Thank you, Kathy, for being here with us. And I hope everyone finds this information relevant and helps you with your taxes. Take it away, Kathy. Thank you.
You're welcome, Cecilia, and thank you for having me. And thank you, Lana, for everything that you do for the financial literacy series too. So tonight we're going to talk about the ongoing tax season, which is now in progress. And the tax season for the preparation of 2022 income tax returns has been progressing smoothly so far, which is, I'm keeping my fingers crossed because this hasn't been the case for the past few years, but so far so good. The e-filing of returns was opened by the IRS on January 23rd. By mid-February, most taxpayers should have received their W-2 forms, bank interest statements, and other documents that are necessary to do their taxes. As has been the case for the last several years, some brokerage statements have been delayed until mid-March. I think actually some of my clients are just now receiving their brokerage statements. These are known as Form 1099-B, and they're needed because this is where your stock dividends and your capital gains from any stock transactions that you may have are reported. So you need to wait to actually get that information before you can finalize your tax return. Now we have tax law changes for 2022. The tax law for 2022 is changed somewhat from 2021, and the changes are not for the better. During 2020 and 2021, many credit items, such as the child tax credit and the earned income credit, were expanded due to COVID-19, which helped to reduce individual taxes and produce larger refunds for people. These credits have always been available in some form or another, but for 2022 returns, the credits have been reduced back to their pre-pandemic levels. So people that got very large refunds in 2020 and 2021 will probably just get average refunds this year, and that seems to have been the case so far. The child tax credit and the earned income tax credit rollbacks, we're going to review them here now. The child tax credit is a federal tax benefit that plays an important role in providing financial support for taxpayers with children. People with children under the age of 17 may be able to claim a tax credit of up to $2,000 per qualifying dependent when they file their 2022 tax returns now in 2023. $1,500 of that credit may be refundable. And this information came from the website NerdWallet. For the EITC, the Earned Income Tax Credit, eligible taxpayers with no children who received roughly $1,500 in 2021 will now get $500 in 2022. So this was cut back a lot. The Child and Dependent Care Credit, which is not the same thing as the Child Tax Credit. The Child and Dependent Care Credit is for people who have caregivers that they pay and that those caregivers are receiving either a W-2 or a 1099. That is returning to a maximum of $2,100 in 2022 instead of $8,000 in 2021. So this was slashed tremendously too. It's roughly a third of what less than a third of what it was in 2021. Additionally, age limits for the Earned Income Tax Credit have been reinstated, and only persons that are 25 to 64 may apply. During the pandemic, the age limits for the EITC were lowered to 18 and did not have a cap on the upper age limit. So now these new age limits for this year are back to what it was originally before 2020. Now, New York State and New York City have increased the earned income credit. So that actually is helpful. So whereas the federal has decreased it, the state and the city have increased it. As just noted, the federal government has rolled back the earned income credit to pre-COVID levels. Ironically, New York State and New York City have done the opposite and have increased their earned income credits. The New York State credit is generally equal to 30% of your allowable federal earned income credit. Recent legislation increased the New York City earned income credit The credit was 5% of the federal EIC previously. Beginning in 2022, the New York City earned income credit will range from 10% to 30% of the federal EIC based on a taxpayer's New York adjusted gross income. So this is a big increase on the state and city level. So what this means is if your earned income credit for the federal return is $1,000, that you would get up to $300 from New York City and another $300 from New York State. So more information on this can be found on the New York State website, tax.ny.gov. The Earned Income Tax Credit is a fully refundable credit, and the Child Tax Credit is refundable for up to $1,500. This means that if you qualify and the credits exceed your income tax, you will receive the difference back from the government. For example, if your tax on your return is $500 and your Earned Income Tax Credit is $800, your tax liability would be covered, the $500, and you would receive the balance of $300 from the IRS. The same is true of the Child Tax Credit, but only up to a maximum of $1,500. Now we're going to review income documents here, and the income documents are the basis of what one's tax return is based on. So when you either come to our CWNY tax preparation, or if you go to an accountant, or even if you're using TurboTax or something online to prepare your return, you have to make sure that you have all your correct documents with you. The most common types of income and the documents that people typically receive to report it are W-2s for wages, for just people that have jobs, 1099 NEC, that's for self-employment and independent contractor. The NEC stands for non-employee compensation, and 1099-G, which is unemployment compensation. W-2 forms are received in a typical employment situation where a person works for a company. The W-2 will show one's earnings for the year, as well as any deductions such as 401k, Social Security and Medicare tax, and federal, state, and city tax withheld. The 1099 NEC replaced the older 1099 miscellaneous in 2020 as a document to report self-employment or independent contractor income. Unlike a W-2 form, where a tax return must be filed only if income exceeds the standard deduction or if tax is withheld, the recipient of a 1099 NEC must file if the income reported exceeds $600. In most instances, the recipient of a 1099 NEC will report the income on Schedule C, which is profit or loss from business, and will be able to deduct business expenses spent in earning the income. So if you receive a 1099, let's say for $1,000, you are able to deduct expenses against it. Let's say you had travel, or you used your cell phone, or there's all different types of business expenses that are available, so that you don't pay tax on the full $1,000. You would only pay tax on what would be considered your net income. That's after your expenses. Now, paid family leave is something that I've been seeing more of this year than I have seen in previous years, as far as among my clients and tax returns I prepared already. So for the 2022s that I've worked on so far, I've seen an increase in taxpayers receiving a significant amount of paid family leave. This is an important 1099 to remember when assembling your documents for your return. I already had 2 clients that came in and did not bring this 1099 with them. So now, since I filed their return, they will have to do an amended return to report this income. Paid family leave, which is typically 67% of one's weekly salary, is fully taxable. And in most cases, tax is not being withheld. I'm not sure exactly why that is, because some of my clients that did bring in the form had mentioned to me that they asked the companies to take taxes out, but yet the tax was not being taken out. So it still needs to be reported whether they took the tax out or not. So in many cases, actually in all cases, the fact that people have received the paid family leave is going to increase their taxable income. And if no tax has been taken out, then it's going to either decrease your refund or possibly cause you to pay more in taxes. Now, something that I've seen less of this year is unemployment. In 2020, and especially in 2021, a lot of people were receiving unemployment. So this is a positive trend for 2022. There's a decrease in the number of taxpayers who received unemployment benefits. For 2022, as was true in previous years, except 2020, there was an exemption. But for 2022, all unemployment benefits received are fully taxable by both the federal government and by New York State and City. There are no longer any exemptions in effect. A reminder that the New York State Department of Labor will not mail you a 1099-G. If you did receive unemployment benefits, you will need to go to the Department of Labor website with your username and password in order to access your 1099-G, showing the amount of benefits received. Now, this is also a little bit of an issue because since people haven't really received unemployment in a while, some clients have not remembered their username and password. So it might be a problem getting back into the site, but that's the only place that you're going to be able to access this form. So the instructions here were from the New York State website. Tells you how to get to the DOL and then what to do to see your 1099-G and to bring it, either to bring it to your accountant or to print it out so you can use it when you file your taxes yourself, if that's what you're doing. The terms credit and deductions are both money savers for the taxpayer. Many taxpayers can benefit from either one or the other, and sometimes both. A credit will directly reduce your tax on a dollar-for-dollar basis. Some credits, such as the Earned Income Credit and certain education credits, will even refund you the amount by which the credit exceeds your tax liability. This is what we saw in the example earlier, that you can actually, it'll cover your tax and then you get the difference back. A deduction is an allowable item that will reduce your taxable income so that your tax liability will be lower. Deductions do not reduce tax liability on a dollar-for-dollar basis. The benefit is based on your own tax rate. Deductions are an allowable amount that reduce one's income in arriving at taxable income. All taxpayers may choose to use the basic standard deduction to calculate their taxable income. Most taxpayers will have to use the standard deduction if their potential itemized deductions do not exceed the standard deduction threshold. The standard deduction is the basic amount allowed to reduce income. The amount of the standard deduction is based on one's filing status. The standard deduction has increased again in 2022, as it did in 2020 and 2021. The following amounts apply to the 2022 tax year. The standard deduction for single is $12,950, which is an increase from $12,550 last year in 2021. Married filing jointly is $25,900, which increased from $25,100 last year. Head of household is $20,800, which increased from $18,800. And married filing separately is the same as single. It's $12,950, and that's an increase again from the same $12,550. The standard deduction amounts for New York State and New York City are not the same as the federal amounts. They differ. The 2022 amounts for New York State and New York City are $8,000 for a single person, $16,050 for married filing jointly, $11,200 for head of household, and $8,000 for married filing separately, which again is the same as the single standard deduction. Unlike the federal standard deduction, these amounts have not increased from 2021, and they have not increased in several years. So these amounts have been steady. I'm not sure why New York State doesn't want to increase them, but they don't, they haven't increased. Itemized deductions are a list of specific items that, when grouped together, will lower your taxable income if they exceed the amount of the standard deduction. For example, if a single person has itemized deductions in the amount of $14,000, it would be beneficial to use this amount rather than the allowable standard deduction of $12,950. This process is not as straightforward as it appears, however, as we will see shortly. Itemized deductions available to taxpayers include medical expenses, including insurance premiums, out-of-pocket expenses, co-pays, vision, and dental expenses. Travel to and from doctor's offices, such as cost of taxis, are also deductible. However, your medical expenses must exceed 7.5% of your income before you can use any of them. For example, if your income is $50,000, your medical expenses would have to exceed $3,750 before any of the amount becomes usable. And then only the difference between the amount and the base is counted toward the deduction. Other types of itemized deductions include state and local taxes withheld from one's pay during the year, as well as any balance due that was paid on a prior year's state tax return. Real estate taxes are deductible with limitations. These two itemized deductions are referred to as SALT, state and local income taxes. The SALT deduction is currently limited to $10,000 per taxpayer. So even if you have a house, let's say in Long Island, where your taxes might be like $18,000, you're only allowed to use the first $10,000 of the real estate taxes. And that has to be combined with your state and local taxes as well that you had withheld from your pay. So there's been much controversy about this limitation, particularly here in New York and several other highly taxed states, including our neighboring states, New Jersey and Connecticut. In fact, the SALT tax limitations impact approximately 10 states or less throughout the US. Although there has been some discussion regarding revision of the SALT limitations, it is still in effect for 2022 tax returns. More itemized deductions that can be looked at and possibly used are mortgage interest. Mortgage interest includes interest paid to banks and private lenders and includes points and origination fees paid on a purchase. Now, one thing that is not available for deduction this year, it's been eliminated, is there was a deduction for mortgage insurance premiums. Now, mortgage insurance premiums are not mortgage interest, but mortgage insurance premiums are required if a house is purchased with less than a 20% down payment. So until this year, the mortgage insurance premiums for that type of purchase were fully deductible. This year, they are not. If you purchased a home this year, you should look at your closing statement closely, as you may have paid mortgage interest and real estate taxes that may not appear on the Form 1098 that your lender provides. Those items, even if they're paid outside the Form 1098, are deductible. Anything that is mortgage interest or real estate taxes. Charitable contributions can be deducted for both cash and non-cash items. If a cash contribution of more than $250 is made to a single recipient, such as a church or charitable organization, a receipt is required to be kept in your records. You don't have to send it in with the return, just have to have it on hand. Non-cash contributions such as clothing and household items must have a receipt for contributions in amounts over $500. Many people believe that in the case of a non-cash contribution, the organization will let you know the amount of your donation, but this is not the case. The organization will only provide you a receipt saying that the item was donated and on what date, and maybe they'll itemize what you gave. But it is up to the taxpayer to estimate the amount. A change for 2022 is the removal of the $300 charitable contribution deduction for non-itemizers that existed in 2020 and 2021. And personally, I can't believe that they would do that, because that was such a small extra deduction that they were allowing people to have. And this year it's just gone. So you have to itemize in order to take your charitable contributions. With the introduction of the Tax Cuts and Jobs Acts of 2017, the deduction for miscellaneous job expenses such as union dues, work clothes, work tools, work travel, job-related education, and other items of this type have been eliminated for nearly every type of occupation. So there is no need to hang on to small receipts for this type of item, as they are no longer deductible. The exception is that teachers are allowed a $300 adjustment to their income for the purchase of school and classroom supplies. This was increased from $250 in previous years. And this includes the purchase of PPE, disinfectant, and other safety supplies for the classroom that were related to COVID-19. The bottom line on itemized deductions is this: due to the limitations placed on them, limit on medical expenses, SAL cap, and so forth, most taxpayers will not be able to itemize and will use the standard deduction, especially since it's increased again. Standard deduction is really pretty high on the federal level. Itemized deductions can be most frequently used by taxpayers who own homes and would have significant mortgage interest to deduct. Unlike a deduction, a tax credit can save a taxpayer money on a dollar-for-dollar basis. In some cases, if your tax is reduced to zero by a credit, you may be able to receive the additional amount of the credit. This is known as a refundable tax credit. A quick overview shows at least 20 credits, non-refundable and refundable, available to the average taxpayer. These include the earned income credit, the child tax credit and the additional child tax credit, and education credits for college tuition, such as the American Opportunity and the Lifetime Learning credits. Now, the American Opportunity credit is only for the first 4 years of undergraduate study, but the Lifetime Learning credit is available for higher education, graduate school, and technical training as well. These credits help families raise and educate their children. Tax help is available. Tax preparation assistance is more readily available than one may realize. Right here at CWNY, we are providing free tax preparation services on Thursdays at Queensborough Hall and at Fort Totten through April 6th. Other free tax services include VITA, that's the irs.gov website, and there's a phone number for them. The Bethpage Federal Credit Union, we have their website and their phone number. And also AARP has tax aid, and we have also included their website and their phone number in case you can't get to see us. New York City taxpayers are also able to check online if they qualify for the increased New York City earned income credit. The website is nyc.gov/getcredit. If you qualify, you will still need to file a return to get the credit. So this website isn't to file to get it. It's just to input your information to see if you do qualify. Then if you do qualify, you need to file your tax return. The tax filing date this year is Tuesday, April 18th. The usual April 15th deadline is on a Saturday. So when a tax filing date is on a weekend, it always goes over to the next business day, which seemingly should be Monday the 17th. But Emancipation Day is observed in the District of Columbia on Monday, April 17th. So the IRS is closed. So this holiday honors the end of slavery in Washington, D.C. The next business day then is April 18th. So that is the federal income tax filing deadline this year. Thank you for attending this evening. Our next webinar in our CWNY Financial Literacy Series will be Wednesday, April 19th, when our topic will be Basics of Investing, and we're hoping that you can join us. Thank you.
Sorry, I was muted. Thank you so much, Kathy, for bringing us information, not necessarily uplifting, but important
Yeah, not
information.
good this year.
That's right.
You're welcome.
We're very thankful for, for all this, like news, which is not like, again, it's not that uplifting. I wish there were more options. It looks like only for the education of your children and homeowners who are paying a lot of interest. It's still okay. We can take advantage of our tax returns, but I do feel that that feeling of like, oh, I'm getting my tax return, it's going to be gone in a few years because we're getting less and less in return.
Yeah,
Anyway,
the refunds are very much lower this year. They really are. So
even last year when we help people, and when I say we, that was Kathy, but the center, like through the center, we helped women do their tax return, women and anyone who'd like to do their tax returns. They were very, very disappointed, and I'm afraid that it's going to be the same. But anyway, like we can at least help with, facilitating that task, like, and we can make it easier. You don't have to pay for it. You can come to the center, to either location, and you can do your taxes. If anyone has any questions, please feel free to, I think you can raise your hand so we can allow you to talk, or you can, let me open the participants window so I can see. If you call in, you can email your questions, and I see someone raise their hand. I'm going to allow you to talk, Alana. You can unmute yourself and ask your question.
Yes, I'd like to ask a question about American citizens that live sometime here and sometime overseas, and they need to file taxes. They have the same rule as a person that lives permanently in the United States. Do they have to fill up taxes even though they are already, I would say, 70 years old?
Yes, the answer to that question is definitely yes, because this is a very good question, because there's a lot of misconceptions about this. The age of the person has nothing to do with whether they need to file a tax return or not. It depends on what type of income they have and how much of that income they have. So a person can be like 90 years old. If they have sufficient income that would be taxable, they absolutely must file a tax return. Now, as to the other parts of your questions, if the person is a US citizen, even if they are overseas part of the year, if they have income from United States sources, they have to file their regular income tax. And so it would just be the same as if they were here the whole year. It's just that they may be able to get an extension for filing because they are overseas. They may have the opportunity to file at a later date after April 18th. But again, they get an automatic 2-month extension if they're out of the country on April 18th. So they would be able to file until June 18th without filing the extension paper. But then after June 18th, they would actually have to file the extension paper to get a further extension.
I see. Very good. Thank you so much for this answer. Yeah, I have appointed to see you tomorrow, actually, at 11 o'clock.
Yes, thank you. That's great. I'm looking forward to seeing you.
Yes, and yeah, definitely I made your cheesecake.
Oh, I'm coming.
Yeah.
I'm coming there.
In fact, my sister coming from overseas tomorrow early in the morning, so I'm gonna maybe see if she's not jet lagged. I'm gonna drag her with me because she wants to file her income tax. So I told her that I'm gonna make you private appointment with you, Kathy, if you can see her.
Sure, and, absolutely. Bring her with you. Yes.
If she'll be able to make it, because she's going to land tomorrow morning, 5 o'clock in the morning. Alana,
We do have other appointments at different days in case she's tired, so feel free to
Yeah,
make
she
an
might be
appointment
tired.
tomorrow or any other
Right.
day.
Yes,
have
that's
that.
true. That's true. That's true. So we'll see if I'll be able to schlep her with me tomorrow. I'm just gonna tell her, don't worry, we're gonna drink a cup of coffee and good cheesecake. Maybe she's gonna come in.
Oh, I
We'll
look
see.
forward to seeing you, Ilana.
Yes, yes.
There's another question here. I want to give everyone the opportunity.
Thank you
So
very much. See you tomorrow, dear.
Yes, see you tomorrow, Alana.
thank you.
Sure.
More looking forward to it. So Priscilla, you can unmute yourself.
Hi, thank you for this much needed information. I have been funding 529 plans for a couple of years for my grandchildren. And last year was the first time I was afforded the opportunity to support one of them. And I withdrew for his tuition. And I have a 1099Q.
Q, right, the 1099Q. That's very good. That's a great thing you're doing, Priscilla. So what will happen with the 1099Q is that the amount of it that you spent on tuition, which I'm assuming would be all of what you took out, is not taxable.
Oh,
You
okay.
have to bring the form though. So if I'm going to do your taxes, definitely bring that form because it
So-
does have to be reported, but it won't be taxable because the money was spent on the education.
So is it just considered earned income or something?
Well, it's reported as income, but then it's offset by the amount that was spent for the tuition.
Got it. Okay, thank you.
You're welcome.
Thank you for your question, Priscilla. And now we have Sonia. Sonia, feel free to.
Hello. Hi. I live in New Jersey, so I'm too far away to come there. And I don't know if you even, handle New Jersey taxes, but I was
Yes, we
wondering.
do actually.
Okay. I I guess I was wondering, like I'm in Central Jersey, so I think I'm pretty far away, but is there any online tax sites that you recommend if someone needed to do it themselves online?
Yes, well, what you can do is the IRS has a free file set up, which is actually very good. What you do is you go to the irs.gov website
Mm-hmm.
and they give you choices of different programs that are available.
Mm-hmm.
Now, there's a few catches to all of them because they say that they're free, and they are free for the federal, but many of them are not free for the state, and whatever state you live in. And also some of them are only free if you're a certain age or if you have certain income limitations. But I would say that shouldn't stop you from using them. The one that I like the best out of all of the ones that are there is it's called OLT. You'll see it like when you go to the website and you follow the steps, it'll give you the choice of all the different programs. And OLT is the least expensive. And it's also not tremendously hard to follow for non-accountants. I used to recommend Tax Act, but Tax Act has gotten pretty expensive this year, even on the free site. They're charging $43 for the state return. So I don't see how that's kind of far from free. So I would say if you're going to look at the IRS website yourself and choose a filing source, I would recommend the one that says OLT on it.
Okay, great. And I guess the program will make sure you get whatever deductions you're entitled to.
Well, see, that's the thing. Yes and no. That's the problem with any of these programs, and even TurboTax. Everybody seems to love TurboTax. These things kind of guide you toward what you're supposed to be deducting, but it's not going to make you aware of things that are like out of the ordinary. So you kind of have to know what you're entitled to begin with before you get involved with any of these programs, to do it yourself. So what I would suggest is that you should definitely look at your last year's return. You will need your last year's return anyway to e-file, because in order to send an e-file, you need to know your adjusted gross income from the prior year. So I would say before you start working on any of the programs for this year, to go over your last year's return very carefully to see what was deducted.
Oh, okay. And since I am far away and you do New Jersey taxes, do you have a way to do them virtually?
Well, what you could do is, it depends on your, level of wanting to scan things. I know, a lot of people don't like to scan their documents. They feel it might not be secure, so it's up to yourself. Like if you want to scan the documents to the CWNY email, then they can forward them to me and I could take a look at them for you. And maybe we could do it that way.
Okay. Okay, great.
So,
Thank you. Mhm.
And I'd
yeah,
also need,
Sonia,
and I'd also need your last year's return as well. So I would need all your this year's documents and your last year's return.
Okay.
Sonia, if you can send us an email, and Lana, if you don't mind putting our email address, maybe events. The email on the chat, you'll send us an email there. And I will make sure that that Kathy tells you which documents you need, and you can reply to our email there. Send us all the documents that she needs, and maybe you can make an appointment, and we can have you virtually, Kathy, if it's okay with
Yes,
you.
sure.
We
that's
can
fine.
do a Zoom call, so you can talk to her as if you were in person, and she will already have your documents printed at one of our locations.
Okay, great. Thank you so much.
Welcome.
You're welcome.
Yeah, anything we'll adjust to anyone's needs if we can.
We'll figure it out.
Okay,
That's
thank
what we're here
you.
for.
Okay.
Does anyone have any other questions? Feel free to raise your hand or to put them in the chat. In the meantime, I will do our. Thank you again, Kathy.
You're welcome.
These are programs. I know I already mentioned them. Lana just put the links to the registration or to the appointment booking link. So there are 2 locations. And Sonia, if you'd like to schedule your appointment now, maybe not for tomorrow, so that we will give us time to get your documents, print them, give them to Kathy. So maybe any of the future days that we offer in either location, because it will be virtually. I would suggest for Taunton because it will be easier. Yeah, let's make the appointment for Taunton, Bayside. It will be easier to do Zoom and everything. So make your appointment. We will help you with your taxes and all the other programs. If you'd like to join, you're always welcome. As you see, we can adjust to your needs. We're here to serve the community needs, the women in our community. If you'd like to become a member, you can go to this link that Lana will put in the chat. You can also donate if you feel generous today. All the donations go to programs that we offer. You can contact us here, and our website is cwny.org. And again, we have these 2 locations. And our general email, it's info@cwny.org. You can also follow us on social media. We're on Facebook, Twitter, Instagram, YouTube, and we have the podcast.